The bond is 11 billion shillings for this first tranche. The tenor is 5 years. The offer has opened on 27th October and it will be open for 2 weeks. So the full program is 20 billion, which means we have approval to go up to 20 billion within the lifetime of this bond. So at any point in time, should we need access to further funding, we can then come back under the same program. Because we have the approvals, then it will be a quicker process to issue the bond. That gives us some flexibility in terms of should we need to come back into the market, then we can quickly do that.
It will be the full spectrum of investors. So that's your institutional investors. So that means fund managers, banks, insurance companies, as well as retail. Now, the minimum subscription amount is 10,000 shillings. So it's really open to the entire universe of the retail.
Issues with redemption are much more straightforward, and also they're time bound in terms of when we need to go, because we would have to give a notice and then pay down by the 29th of October. And so it was a much easier, quicker process. On the new issue that requires approval, then a number of other steps that had to be completed before we were ready to go out. This is just the nature of the two processes meant that they just couldn't run concurrently. We always look out for opportunity to better optimize our balance sheet as well as our income statement. So looking at it a year from now, the bond becomes current. There are a number of things you can do. And one of it was to pay it down and then get something that's longer. It increases the tenor of our loan book and gives us a lot of balance sheet stability. So we thought the timing was optimal, the rates are fairly decent, and so it's a really good time for us to go out and raise some money. The process of doing an MTN is long, it's onerous, it requires a number of approvals. So it's good to give yourself cover for a bigger program, so that as and when the conditions are optimal, then you come back without having to go through the whole process. Secondly, we see a big opportunity to fix a larger portion of our book. This issue does not increase the level of our debt, but it's just about balancing the mix of our fixed and floating and giving ourselves more stability on the balance sheet and on the P&L. So that's really what informs that position. So this is really just continuing the process of ensuring that long-term funding is used to support long-term assets and is matched to the life of the assets that you've bought. And then just keeping our debt ratios are really quite good. So keeping our debt level constant, but giving ourselves longer tenor in the book. For the banking side, we use that mostly for working capital requirements, but it also gives us headroom. If we have bigger working capital needs, that we have headroom with the banks to go back.
Our job as the arrangers is to bring together both the issuer, in this case EABL, and the investors, which in this case is the whole universe, which is your commercial banks, your fund managers, and even your retail. And so once that's done, and once the offer closes, then if it's public, you then look to list the issuance. Very fortunate to have worked with EABL on several of their bond issuances over the years. So we do value this relationship, we value the partnership and what we do together whenever we target the market. I think when we look at the capital markets, we feel that the capital markets could even be bigger in Kenya. So this particular issuance, I think, will not only just bring in issuer confidence in terms of having another avenue to raise funding, but I think even from an investor perspective, getting to invest in assets that over and above what you typically see for government or in your equities when it comes to shares. So that's one thing. The other thing, and which we're quite excited about, is innovation in terms of being able to invest. So traditionally, for a very long time, people would have to actually fill out physical forms. In this particular issuance, you can actually apply online. So actually no need to actually fill out paper forms. It makes it much better, much quicker for investors. And even from our side, when we now put together, when you close and actually doing the allocations, it's also much easier from our side. So from an investor perspective, it takes you no more than 5 minutes to actually invest in this particular issuance. So the bond opened today, so 27th of October. and it will be open for 2 weeks. So it will close on the 10th of November, which is a Monday. Once that happens, we'll then, on the 12th of November, essentially do an allocation. And if there's oversubscription, we'll then decide how we'll actually do the actual in terms of allocation to the various investors. The next day, which is the 30th of November, we will then essentially notify the investors of the allocation. And once we do that, they'll have about another 3 days in which to actually fund the amount that they've been allocated. Once that is done, then I'd say near the end of November, we'll then have a listing ceremony. So essentially, where we welcome the various investors, the various parties, to essentially celebrate, I think, this landmark transaction. So that's essentially going to be the process from today up until close, which we anticipate would be right around mid to end November.
There are not very many alternative investments, so for us it is pleasing that we're able to play in this space. We are positive that the market will respond favorably to this. Already we are seeing positive sentiment, so we're very excited to see that this comes out as a successful issue. So we can't tell for sure, but we have a track record. This is the 4th time we're in the markets, and we have paid. Everything was borrowed, sometimes earlier. So I think we've got a great track record. We're a strong company, strong balance sheet, strong results, strong cash flow. So I think there's every reason to believe our story and for investors.
I see it as several things. Number one is I believe this issuance will be a benchmark for other future issuances. I think, as you're aware, we don't have too many blue chip companies come to market. In fact, I think EABL is the only frequent issuer in the market. So I think this particular issuance will be a benchmark for other corporates that are looking to issue bonds in future. Number two, I think just general market confidence. So I think, as we all know, government issues a lot of treasury bonds, but we don't see corporates issue as many corporate bonds. I believe this will be a precedent for future corporate bonds, and I think the indication, when we speak to the CMA and with the NSC, is that there's a lot of interest from new issuers, both from the debt and equity side, in terms of raising funding. So we really see this as the beginning of a very vibrant capital markets in the future.